All right, everyone, this is Vishal from Uncharted FX. And before we begin, if you haven't already hit that like or that subscribe button, please do. It really does help the channel out. A lot to talk about this week in terms of the macro and also the political world. Not very many pairs, just because a lot of them are already extended, right? So we'll talk about some things that look interesting, some things that we traded last week. But before we get into that, let's just get the calendar out of the way because there's so much else to talk about. But you can see here on Sunday, we do have the Q4 GDP from Japan coming out. Consensus is another contraction in the Japanese economy here. We do have the Chinese CPI, and this will be very interesting, obviously, due to the coronavirus and the slowdown. On Tuesday, we have Euro GDP, and we have on Wednesday the US CPI, ex food and energy. And then this one is going to be interesting. We have a ECB interest rate decision and a deposit rate. Again, folks, are they really going to cut further into the negative? I don't think that's out of the question. A lot of people are still buying European negative yielding debt or bonds because they are expecting deeper rates into the negative, which means the bonds that they're holding now are actually worth something. And again, I've covered this and we will talk about this further, but bonds are now being traded for capital appreciation rather than yield because there is really no real yield to be made. And that's about it. So it is a crazy week, obviously. Let's start with the equity markets. But before we do that, we have to talk about the Fed. We had an emergency rate cut on the Tuesday of last week. So, we had a whole round of rate cuts. Actually, on Monday, we had the RBA, the Bank of Australia, cut rates by 25 basis points. And then we had the emergency rate cut that the Fed did. And then on Wednesday, we had the Bank of Canada follow along. And of course, if you followed my work and the video last week, I was sort of warning about that. And we'll talk about, why we still expect further cuts and what the bond market is telling us. But let's just stick with the markets first. And what I want to talk about is, we talked about market structure, and this was a trade we took a while back, even in the chat room. Of course, the chat room links are down in the description below, Discord chat. But this was what we were looking for. This is where we initially got in. Actually, it was that red candle because that was the breakout there. But again, we were looking for market structure telling us weakness, and this is where we saw that weakness, a very, very big flip zone. Again, a flip zone is where price has been support and resistance. Those are very big levels. And then from there, we saw this fall. I mean, of course, I didn't call a fall like that. We were just taking profits at other flip zones that were nearby. But again, folks, market structure just tells us what is coming, or it acts and then news comes out. A lot of people think news drives these markets, but it really is the day traders and the algos that trade the news. A lot of the stuff is already priced in because I think there is imperfect information. There's some groups, some people, some traders, some large banks, they have this information before we do, and we tend to just see that reflected on price. And that's why market structure is, again, very key. And you can sort of use it once you get used to market structure. You can use it as a way to basically gauge what central banks will do. On the live stream that I had on the chat room, we were talking about that there is a lower high that is expected, right? Because that's just how market trends move, and we are expecting another swing. And this is what all equity markets are doing. We'll quickly go through them all, but I just want to show you the S&P and the NASDAQ and the Dow. They're all sort of similar to this. But this can be our first lower high, but again, a lower high is not confirmed until we make new lower lows. And this is a question, where does that come in? Technically, it's when we take these lows out down here at 28.50. However, if we do get a candle close below these daily bodies here, and you can see here how people came up to buy it when we, on that Friday. We did not close below this, so we have not yet made that lower high. So, as of now, I'm not doing anything with these markets. I'm still waiting for that trigger, and this is a very important time, to remind people that stick with your criteria, stick with your strategy, be patient. A lot of people have lost money this past week because of the emotions. Everything was moving down. Everyone just felt they had to be in the markets, and the media just hyping all this fall up and all that kind of stuff. Again, try to keep clear of that. We're here for market structure, and we just want to see these patterns present themselves, and we are still expecting a lower high here. Again, so a break lower, a move lower for one more swing. But if that does not happen, we're okay. There's plenty of other markets for us to play. We make money while markets go up, go down, or sideways. But still, if we do break back above this previous breakout zone here, then the whole downtrend and the lower high swing is essentially nullified. But until that happens, this is all this applies to all markets. We are still watching for that lower high swing, and I just want to show you here quickly. The Nasdaq is very similar, the Dow Jones here as well. Oh wow, okay, so yeah, this is like I'm recording this while the markets actually just open, and you can see here that's the daily chart. But just as we open, we are actually moving down much lower. I think the S&P just opened. Yeah, there we go. So there we go, folks. Right when I started recording it, the markets did open 3 p.m. Pacific Standard Time. So yeah, look at the sell-off. We're already down more than 2% on all these markets here. And again, though, it is a daily trigger. We're going to wait for this. There's not much liquidity out there right now, obviously. So be patient. Just allow these markets to do their things, and we get in when we see our triggers. The Russell, so I mean, I'm talking about this, and now all these daily charts. Look at this gap down already. But this is a very interesting one here. This was yesterday's Friday's close, sorry, and we just did not close below that low there, just barely. And you can see things like this happen, but because we closed below these bodies here, it is very psychologically, think about it. If you had a buy position here, what would you be thinking? And there is a lower high here, I guess, that we could play with. I just do not like to hold positions over the weekend. So we're already down like more than 3% on these markets. And the Dow is what I'm watching. Sorry, not the Dow, the Russell is what I'm watching, and I'll explain a bit of that later. But again, the Nikkei. So all these charts are continuing. I actually did short the German DAX. Again, because this daily candle did close below these bodies here, so I thought that was a bit of a sign. Again, we do want to see the wicks taken out, but just psychologically, it tells you a big bit up, but then we had to close below the opens, right? So it tells you a bit of something. And of course, I did close this position, but all the European equities are actually giving us much more confirmed weakness here. Here's the French CAC, and here's the Spanish IBEX, and then the Euro stocks here. And I think, a lot of it has to do with Italy. So I'm going to be watching the Euro stocks this week. A lot of crazy news coming out from Italy in terms of deaths and countries being shut, the country being shut down. I think they had some issues with Milan there. So, I think we're going to see the Euro stocks there, but all markets, here's the Australia 200. So now we do have our confirmed lower high because we did break below these lows here. So, we should expect one more swing down, and this still applies for all these markets. So very interesting to see, what these markets do this week. And this is where we go to the bond market. So we have to talk about the bond market, and let's scroll out on the weekly. Well, daily doesn't matter, but we're at all-time highs for bonds, which means that money is running into bonds for a risk-off environment, for safety really. But you have to ask yourself, when bonds are yielding this much. So this was another crazy thing. We had the 10-year and the 30-year yield and the 2-year yield. Bonds were down the bond yields, were down 16 to 20 something % for that day on Friday. And this is the one you have to watch. So the 10-year is what I want to watch. And what we are expecting here is, if we do not see some sort of stabilization, you can see here the 10-year is already, at 0.76, 0.75. But if we do not see some sort of stabilization here on the 10-year, expect markets to move down further. And in terms of rate cuts, this is what you have to watch. So the Fed cut, and there is another meeting on the 18th still, right? So next week. And this is the futures, the Fed watch futures. There is still a chance, 60.5% probability that the Fed is cutting 50 more basis points. Interestingly enough, on Friday, this was actually at 70%. So that would be cutting 75 basis points. And how can we use this? It does come down to the 10-year again, folks. The closer we get to the meeting, and if we see the bond yields stabilize, let's use 0.75. If we see the 10-year stabilize at 0.75 and higher for this week and the next week, then yes, I do expect the Fed to cut to 75 because they have to be ahead of the yield curve. Don't really want to explain too much on the way the Fed funds work, but generally banks, they borrow with the Fed funds, and then a lot of that money is put into the 10-year. So if the Fed funds is higher than the 10-year, there's a negative carry. And, obviously the Fed has to fix this problem, which means they have to cut to get ahead of this yield curve. But if we do see the 75 zone get taken out, we were like below 70 last week, like we hit like 0.6. Or we can check here, 0.66. But if we see this move down a bit lower, the Fed actually has no option, but they have to cut down to 50 basis points, which means a 75 basis point cut. And this is what we're going to be watching. Is there going to be another emergency rate cut by then? So this is what a lot of people are very surprised with, and there's a big division amongst traders and investors. But a lot of people thought the Fed was wrong to cut on that Tuesday. What people are saying that they should have waited till the weekend, on Sunday perhaps, and then cut. That way the markets would have been, they would have opened green most likely, right? A lot of people are also they are questioning the Fed's decision to cut when it was a green candle. People are saying you should have waited for a red candle, but I mean, that didn't really matter because we did finish lower even with a rate cut anyways, and we did give up the rate cut gains. And again, the more important thing, and I've said this in my blog post, but all this is about confidence. With the Fed doing an emergency rate cut, does that instill confidence? Or does that tell you that the Fed is panicking? And a lot of people think that that's telling us that the Fed is panicking, because they should have waited till the 18th. There's a meeting on the 18th, but they had to cut 2 weeks prior to that meeting. And there is a chance, like I said, folks, they could be cutting again, and the 10-year yield is what we will be watching. If we see that get hit further, they will have no option but to cut. And, the question is now, do they wait till the 18th? Can they wait till the 18th? And we're going to be watching the 10-year yield. That's what it's all about. If we see this move down lower, expect markets to not like what's happening in the bond market. Another thing is, what is a rate cut actually accomplishing? With this coronavirus stuff, and again, I have my theories on it. I think it was timed properly. It's a way to save face for these governments and central banks. All these issues were already happening in the world economy. Repo was telling us that there was problems, and then this comes out and we see the sell-off. We see oil crash. We see bond yields crash, telling us more rate cuts are coming, and also they're going to be going back to QE. And this is a way for government and central banks literally to save face and divert the issue, they could use the coronavirus as the scapegoat rather than their own incompetence and the failing monetary policy. So that's my theory. If you follow my work on my blog, I've been writing about this for almost 2 years now. Have been expecting this. This is all confidence. I am a classical economics by heart. That's what I follow, and the markets were telling us something, and it's all about confidence in this game. And we talked about gold. A lot of people were very I had a lot of messages about this big red candle for gold, people saying, oh, look at this. But as you saw my video, and I've talked about this was a big level, and we were expecting a second higher low swing, and we have not yet made that. So I am still bullish on gold as long as we stay above the 1450 level, because that is the higher low that we are still playing with. Can we see gold maybe move a bit lower? I wouldn't be surprised, because I think there is still going to be a large amount of fear, a lot of margin calls, panic selling, because a lot of things will be going down. But I think in the long run, gold is still going higher. But this week will be very interesting now. And again, folks, market structure, it's been telling us that we've been bullish on gold ever since this break here, way back in June of last year. So that was gold. I want to talk about the Bank of Canada quickly. And this again is what I followed, the XBB, and this was telling us that a rate cut was coming, because the XBB was going up higher, and it has now broken up into all-time new highs. So I am still expecting more cuts. And again, if you follow my work, I'm expecting all these world banks, or central banks, sorry, will be going down to zero, and perhaps negative, and we might see that very soon, maybe in a couple of months time, depending on what happens. I mean, if we see the Fed cut down to 0.50, so that would be 1.25 percentage cut in less than 2 weeks. I think they're going to be going down to zero eventually, and very soon, right? And I think, again, I think this coronavirus just provides the best sort of scapegoat for this. They wanted to do this, but they were using the whole the economy is the strongest ever, it's booming, and now this provides a perfect scapegoat to say, hey, look, everything we were doing was great, and now this happened, so we have to take this drastic action that we did not want to do, but here it happens. I want to now talk about oil quickly. And a lot of people saw this big move in oil. Oil was down like 10% on Friday. Just absolutely crazy. Oil's here getting smashed. And you were hearing news that OPEC, that Russia has basically snubbed the Saudi production cut. And a lot of people are saying this is Russia now trying to kill the US shale. Because of shale, a lot of oil came onto the market. America went from energy dependent to energy independent, which meant a lot more oil was coming on to the market. A lot of uneconomical oil, by the way, because shale is, I think there's obviously been more improvements, but it's very, it's not economical at all. And, that's added to the supply glut of oil around the world. And, we're hearing about China's shutdown and stuff, which means a lot of oil demand and loss of oil demand is being calculated here. And, if there is a world recession or a global recession, we'll see oil move down a bit lower. If you, I have a post on OPEC and game theory, and this is why generally production cuts don't work, because there is, and this is if demand remains the same, there is a big incentive to cheat. And this is what the Iranians have done. They have stolen a lot of Saudi market share. And again, there's a big incentive to produce the same, agree with the cuts, but then produce the larger amount in order to make more money, right? And then once everyone finds out that these countries are cheating, they all bring their production back up, and you're back to where you started. And, this is the reason that, like I said, a lot of these production cuts don't work. And I'm actually a bit surprised, because I think a lot of these countries now, they know what's coming. They know that there probably is going to be a global recession. So let's take Russia, for instance. They know there's probably a recession coming. And what they want to do is they want to sell as much oil as they can at these prices before the prices move lower. And I think, as I said, generally these production cuts don't work, and this could be a market structure thing, right? Market's telling us what it wants to do, and maybe a black swan or some event could maybe change that, but this is what we were talking about on the weekly chart. We are still looking for our first lower high swing here, and we did get that now because we got this break below these previous lows here. And you know, we're expecting oil to test perhaps 34.11 or this 34 zone here, so we are still looking for weaker oil. But the one thing that's very interesting for me is the charts for copper. And again, as I'm talking or speaking, sorry, we are seeing this break, but not the close yet. But this is the area that I've been watching for copper, the 250 a pound zone. And I've been saying if there is talks of a global recession, we will be seeing copper lower than 250. And just again, market structure, we had our initial downtrend and we're looking for our first lower high swing. This could be it, but we need that confirmation of a break and close below these lows here. And we could be seeing that this week or maybe even by tomorrow. But I think copper is a good opportunity, and it's, you know, obviously not following oil. Some might argue that there still is a supply issue with copper that could maybe change the fundamentals, but I think if there is still this talk of a slowdown, you know, copper, also known as Dr. Copper, will take a hit. And let's quickly look at Bitcoin, because I've been talking about the cryptos, and again, you know, we were looking for the first lower high swing. Again, this is just perfect. Higher low, higher high, higher low, higher high. So this tells us the market structure basically. And then we had that break below, you know, we closed below a previous flip zone. And once that happens, we are now not in an uptrend anymore. We are now in a downtrend, and we could be making our first lower high here. But again, it needs this close below this zone, which we haven't had yet. Of course, you know, cryptos are open 24/7. So could be seeing this today. In terms of a lot of like trades, again, folks, there's not much I want to cover. A lot of them are similar. You know, wheat, we're still waiting for that lower high swing here. Excuse me. I think the dollar is very interesting, like where it's at. And this is the daily zone. I am using the FXCM one, but if we just look at the Dixie here, a very big zone here. I mean, some might even say the zone is probably better down here. I think that would be correct, actually. It is a bit better down here because you can see there's some more points of impact here where price has been both support and resistance. So let's see how the 95 zone is what a lot of people have been watching. So if the dollar breaks below 95, I would find it a bit strange, because I believe money will be running into the dollar. You know, when every central bank is cutting rates, what currency do you want to hold, right? I think it's going to be the dollar, but we shall see. And as I've said, the higher the dollar goes, the worse the world's problem get. Aussie US dollar and the Kiwi, let's talk about this quickly. We did talk about this in the chat. I posted the New Zealand Kiwi here. And again, folks, this is why I like to close positions over the weekend, because you can get these type of things, especially in this environment. We had this gap down. We had a nice sort of reversal pattern here, you know, lower highs, lower lows, and then we started to make our first higher low here and a head and shoulder here. But now, you know, we'd want to see that break above here. And again, folks, in this environment, it's best to not hold your positions overnight, over the weekend, sorry. On the pound, Jappy, we had our break. We're looking for a first lower high swing. This could be happening by tomorrow. This is, you know, we have to see Monday's close, but this could give our confirmation of our first lower high swing. That's confirmed. Swissy yen still hasn't broken below this level here that we've been watching, and I think the Euro Aussie and the Euro New Zealand look very appealing here. I mean, we just had a gap up here, but I'm watching to see this level here break, and same thing with Euro New Zealand. This type of level, you can sort of see here double top pattern, which is usually indicative of some sort of what do you call it? Some sort of like a reversal pattern here. So we are watching these closely, and again, now that we've had a gap up, we want to sort of see how this closes. I've also marked here the US dollar, Norwegian krona. But it's very strange, because obviously the Norwegian krona is linked to oil, and a lot of people know I've been very bearish on oil, and I think currencies like the Norwegian krona and perhaps the Canadian dollar will feel the pinch here. However, this is interesting just because, we're seeing a dollar weakness so far, but this is a good fake out candle here. We had a large wick, a large red candle here as well. So that pretty much was already a trigger for a short in terms of a fake out. But I think I see a bit of a pattern here, maybe an ugly head and shoulder here. So I do want to see if price does break below this 920 zone. But other than that, like I said, folks, it is just one of those weeks where the markets are very volatile. There's a lot of flux right now, and it's best to be patient. I mean, look, we're already down like 3% here, almost 4%, and it's not even a full trading day yet. This is the kind of things we should be expecting, and I think what you should be watching is the 10-year yield. This is going to be very, very important. If we see this stabilize, expect maybe some fear to cool off. But if the 10-year starts to move down lower, we're back at 50 base, a 75 basis point cut down to the 0.25, 0.50 Fed range, and you'll see just even more panic, sell off in stocks, and again, folks, I believe cuts are coming, so I think people are running into bonds as a capital appreciation trade, right? If they know more cuts are coming, you buy bonds right now because they will be valued more when the new cuts happen, and that's a good capital appreciation trade there. And again, it's sort of contrary to what bonds were generally held for yield, but this is the type of world we live in. If you look at Europe and Japan, their banks are pretty much they've killed the bond markets there, right? Their banks are the only ones that are there holding like negative yielding debt at the auctions, and some traders now just trade them just for yield, right? For capital appreciation. But if you're like a fixed income trader in Germany, the treasuries still look attractive, right? So that's why I think there will be a run still into the US dollar, but honestly, it depends on what these rates do. And again, folks, just crazy times. Even if you do not trade the markets, I think it's just a interesting time to be alive. And you followed my work as a classical economist. I've also talked about how human history is cycles of hard money and soft money. And soft money being the fiat currency cycle. And I believe we are at the end or close to the end of this cycle. Again, a lot of other things you can see, decadence in society, in art, and all these other sort of factors, but this generally just happens. And where we are right now, what the Keynesians are doing, they know a lot of their math and theories have failed, but I think they're going to still attempt to keep this system propped by going into a digital currency. And we're seeing news already of China basically quarantining bills, the Iranian government saying, hey, don't use your cash. America is now quarantining US dollars that are coming from Asia. And I think this is a good way to do it, where once you get back onto digital currencies, you can tax everything, you can track money, and there's going to be issues then in terms of money supply. I think there'll be a lot of ways to play around with numbers, and of course you need digital currency, in my opinion, for the MMT method, because it requires a lot of taxation, and that tax could be taken out from people's accounts. And I think, as I said, that will come from a green energy infrastructure program, because a lot of people won't complain paying a lot of taxes if that money is going for saving the planet. But I'm going to leave you guys there. Again, hit the like button and subscribe if you haven't already. Take a look at the links below, my blog, my TradingView ideas, and the Discord chat. Definitely join the Discord chat if you're interested in markets or are a trader or just, want to learn. We're there every day during the US market open.